What is going on, investors? Back again. Another exciting earnings report. Right now, we're taking a look at Amazon, ticker AMZN. Before we get deep into this video, full disclosure, I own shares of Amazon and it is my largest position. So there might be some bias here, but as you can see, the market is reacting almost as favorably as I am to where the shares are headed. They're up 5% in after hours after reporting an absolutely phenomenal quarter where they saw all kinds of growth, 40% revenue growth, and lots of other things. We'll dump into the numbers here in just a second. Take a look at what's going on here with all the different business models. From a higher level, this is a 1.5 trillion. That's with a T market cap company. The PE ratio is always a little out of whack. We'll talk about that maybe in a little bit. And again, we'll jump into the stock chart towards the end and figure out, is there a spot where you can jump on this trend? Because as you can see here, this trend has been intact and is going to stay intact at least for the time being. Jumping into the most recent quarter, Amazon leads with this really long where they talk about all kinds of news and all this stuff. For the sake of this video, I'm not going to go over it, but I'll put a link to this in the video. If you want to go over this, I actually strongly encourage you to do that. We're going to focus on the numbers here, but there's lots and lots of news to dig into if you wanted to do that. So Amazon, unlike probably almost any company I follow, starts off with a cash flow statement. So they want you to analyze this stock from a cash flow perspective, because if you take a look at net income here, we've got 3-month ended here, 1920, we've got a 6-month view, 1920, and then we've got a 12-month view, 1920 as well. You see net income, it's growing, but it's not it's probably not $1.5 trillion market cap net income, because take a look, we did $13 billion worth of net income. Okay, again, this is a company worth over $1.5 trillion. You'd actually expect a lot more net income, but if you know anything about accounting, is net income factors in some stuff that's not necessarily cash, if you're reinvesting in the business tremendously like Amazon is. Well, net income might not be the best way to analyze this. And so what they want you to do is take in mind they've got lots of depreciation. They've got lots of stock-based compensation. They've got other stuff going on. So we've got this net cash flow down here, and we see, look at the 3 months ended here for June 30th. It went from $9 billion all the way up to $20 billion. That's a phenomenal growth of cash flows here. I mean, you don't find many companies with cash. This is why they lead with cash flows, because I would dare you to find a lot of companies with this type of cash flow. Okay, and here's for the 12-month. In the previous period, we had $36 billion in cash flow, which is absolutely phenomenal. And guess what? It went up again to $51 billion during obviously a difficult quarter for most, or a difficult year for most companies, although Amazon is obviously being a large beneficiary of a lot of the stuff that's going on in the world. Just absolutely phenomenal. Investing activities, they also want you to realize, look at all the property and equipment that we buy year over year, quarter over quarter. Look, purchase of property and equipment, it went from 14 billion to 24 billion. They're reinvesting tons and tons of money into this company. And so that's something that you want to keep in mind. The fools out there that say, oh, Amazon doesn't make money. Well, they're absolutely foolish by saying that, because look, this is a company that's taking any profits, any cash flows that they get, and they're reinvesting it back in the business. You see here, they had $51 billion of cash flows, but look, they invested $35 billion back into the business with these different types of things, although purchase of marketable securities and things like that, not necessarily an investment, it's just holding cash. Now, from a financing activities in here, they've got some debt and some other stuff, but it's very minor when you take a look at the total numbers here. But cash is starting to grow and starting to accumulate on this balance sheet. You see here the beginning cash balance, the beginning of the period, and now 12 months later, we're up to close to $38 billion. That's nearly $16 billion more. Now, a statement of operations. This is a form most of you are very familiar with. We got sales and we got revenue, we got profit on here. So we've got net product sales here at 35 billion in the previous period. Look at this jump for 3 months. It grew 15, we'll call that $15 billion. That is for 3 months. $15 billion growth in product sales. Guys, no wonder Jeff Bezos was in Washington testifying in front of Congress. When you're growing your business this much, you're bound to make some people out there upset, especially other small businesses not on this train. Now, for the full year, 6 months, we went from 70 billion all the way up to $92 billion. I cannot believe that. That's like call that $22 billion jump over 6 months. A lot of companies don't do this in the history of the entire company. Amazon did it in 6 months. It's unbelievable. Net service sales, we went from 27 to 38 billion. And for the 6 months, we went from, call it 53 up to 72 billion for total net sales. This is where you start to $1.5 trillion. Don't get me wrong, is a lot of money. But then when you see for 6 months, you did $164.3 billion worth of revenue. My head is exploding. These numbers are unbelievable. It actually, when you analyze Amazon and then you go and analyze a small company, it almost like skews, it's like looking at Natalie Portman and then going to the grocery store and seeing the girls in your neighborhood. It just skews your whole perception of reality. So total operating expenses down here we see are massive. So we have a cost of sales, we have fulfillment, we've got technology and content, we've got marketing, we've got G&A, and we've got these other expenses which are relatively low here. But we see it's a low margin business, but when you're growing growing top line this fast, you can forgive and forget about some things. So to make we'll take just a look at 6 months here. To make 164 billion, we spent 154 billion dollars. That gives us a positive net income of 9.8. That compares extraordinarily favorably to the 7.5 that we had for the previous 6 months. Unbelievable. From a net income perspective, we see this is rising as well. This is absolutely phenomenal. Earnings per share, this is a company that could easily pay a dividend, but when you're growing your top line like this, just don't give me any money. Take every ounce of pennies that you have, Amazon, and keep reinvesting it into the business, because whatever you are doing, it is absolutely working to a T. Now, let's come down here. Let's take a look at kind of the segments that you have going on here. So we have net sales, we have operating expenses, operating income here for North America. We see this was very favorable. International, it actually it was negative in the previous period and it turned positive. So maybe they reached a tipping point here in international. And for the 6 month, it is improving. And the international business, in my eyes, appears to be at that tipping point where it might actually start generating positive income. So that would be very, very positive. Obviously, AWS, we know, is a high margin business and a high profit business as well. We see profits ticking up very, very steadily here, and I would consider that something that's likely to continue going forward. We see some growth rates here. North America growing. Look at this, 43% growth, 36% growth in the 6 month period. Just phenomenal. Look at all this growth right here. This is unbelievable. Obviously, other retailers are not experiencing this at all. So we come down here to a balance sheet where we take a look at some of the assets. Obviously, this company doesn't need a lot of cash necessarily on its balance sheet, but it has plenty of it here. We've got this was back in December. So here's where we're at here. We've got these marketable securities here, called out 34 billion, and we've got $37 billion in cash. That is in excess of $70 billion. $70 billion in cash. This is why other retailers, other competitors of Amazon are scared out of their mind. They have massive growing sales, massive market share in online retail, and they have massive amounts of cash and cash flows to continue moving this business. Long-term debt's not a whole lot here. We ticked up a little bit, about 10 billion. I think that's where some of it showed up here on the cash side, but this is not a lot of debt compared to even Apple and some of the other companies that in Microsoft, some of the other companies that we've taken a look at. It's a company that is controlling its balance sheet, controlling it to a T. I really am incredibly impressed with what we see going on here. Now, the last thing I want to show you, you've got to really dig for Amazon. Sometimes the numbers are buried in here, and a lot of the time you see opinions on Amazon. Again, the opinion on Amazon is, oh, they don't make any money. The Amazon.com doesn't make any money. Well, take a look here. Online stores, okay? This is net sales. We're seeing net sale growth, okay? Look at the net sale growth here. 49% year-over-year growth on their online store. So that's got to be good. Here's third-party sellers, okay? That grew 53%. The third-party sellers are growing even faster than the online stores in general here. Physical stores are down, and obviously that's likely to be expected because you've had some closures and people aren't wanting to go out as much. As you can see, though, this was a slower growing business for them, but I think it helped add some products to the mix, got them into grocery and things like that. Subscription service as well, growing rapidly. AWS, while AWS's growth has slowed, and I think in the past this would have scared investors and gotten them maybe off shares of Amazon. Amazon shares would maybe not be reacting like this in the after hours if you see that AWS growth actually slowed to its slowest growth rate year over year in a long time, over a year or so. But what investors are starting to wake up with Amazon is their online and third-party sellers are growing rapidly, and eventually they'll stop having to build fulfillment centers. They'll stop having to invest in the business so much. Okay, they've bought a bunch of vans and delivery. I mean, think about it. Did you have Amazon delivering packages 4 or 5 years ago? No, it was the Postal Service and UPS. Now they're delivering their own packages. So they had to build that out. Imagine all the investment Amazon has had to do. And so they've had to invest a lot of money. Eventually, there's going to be a tipping point where they're not going to have to make as much investment, and you're going to have these massive numbers up here with these third-party sellers and the online retail. Just going to be massive. The other thing that's growing is this other category. This is a lot of different things, but primarily from my understanding, this is their online advertising business, and you can see it is growing relatively rapidly as well. The growth decelerated a little bit, but that's probably something you can expect. Advertisers pulling back on their sales and things like that. So everything looks absolutely phenomenal to me. Let's come over here to this chart. Where can you buy Amazon shares? Okay, so we made a low back here in March like a lot of stocks did. Down here, $1,600 per share. Now, Amazon is not broke trend. We looked at Facebook earlier, it broke trend. I actually took the line off here. Same with Apple, it broke trend, but those stocks are trading up in the after hours, and here's where Amazon is trading up in after hours here. But the key thing with Amazon is the stock never, ever broke trend. And so if you want to pick up Amazon shares, I would just close my eyes and buy some shares of this company if you don't have any already. You might have some exposure through ETFs and things like that. But if you want to pure play into Amazon, at some point I might just close my eyes and buy some shares. But if you want to be on the safe side, you can wait until this stock pulls down to a trend line. So you can come here on a graph like this, find the March low, and then draw a trend line up through some of these. It doesn't have to be exact, but you can come in here and get it through a lot of where it hit here, and then get where it hits here. And whenever this stock pulls back to this, notice it has done this. Again, this is not predicting the future here, but it has been a predictor for a while. And as long as Amazon is putting up these types of numbers, this trend will likely stay in place for a long period of time. So I am bullish, very bullish on Amazon. The stock is up heavily in after hours, although it's within reason because this stock has had a monster move and most people were expecting them to have a monster quarter. But I think you can continue that into the next quarter. And as we move to the holiday season, people are still not going to be out there shopping. Amazon is going to be a popular destination for the Christmas holiday, and I think they're going to capitalize big time on that going forward. So that was Amazon. If you enjoy the videos we do here on the channel, maybe consider subscribing and hitting that like button as well. I'd really appreciate it. Maybe leaving me a comment as well. We'll be back again soon with some more videos. Until then, good luck with your investments.